24th, 2020. It's about 11:42 in the market. Today, once again, $1,300 on the day between SPI, PEI, and Tesla. What an awesome day. Let's dive into SPI real quick and talk about it. I took it off today's lows. No, that was on my small account. SPI small account off the lows, 50 bucks. SPI was at 8:02. Yeah, it was 8 o'clock this morning, right when I came into the market. And it was the flag, it was the alert. It was the 5-minute flag to the 9 EMA. So it was looking like it was going to flag on the 1 if we actually pull the 1 minute up at around 8 o'clock. Look at the chart. We can see that we had that super solid move to the upside. It was consolidating, building higher lows, lower highs, looking like it was going to get nice and tight. We alerted it in chat. I was also watching the 5-minute for the 9 EMA, which was down towards around 1650. So it was flagging. I'm not really liking it here, but looking over at the 5-minute, we are still looking like we're in somewhat of a flag pattern, right? Because we do have the technicals being met. You can run a trend line off the lows, run one off the highs. You know, it's not a perfect pennant. It's more of a flag, right? Pennants have converging lines, right? The lines converge together. Those are pennants. Flags are kind of more sloping, right? They follow, you know, the same kind of, I can't even find the words for today. Jesus, the words are like on the tip of my tongue and they won't come out. But yeah, pennants, they converge like this. So on a bull flag, again, there's two different types of bull flags. You got a bullish pennant, we call them flags. That's where it looks like this, right? Your downtrend and your uptrend converge, right? They intersect like that. But you have bull flags. That's where you have more that sloping pattern, kind of like a channel, like a falling channel, and they're more sloping like this. And then you get the break to the upside. So back to the recap, it was still flagging, right? It was still honoring that, you know, a little bit of a flag, huge move to the upside, big time volume, decreasing volume, slowly pulling back on the 1 minute down to 1650 support. And we also had that 9 EMA on the 5. I really liked it. We alerted it, took the trade. I was able to lock in $687.50 right off that 9 EMA. Looking at the 1 and the 5 minute here in pre-market as well. We had a $20 target over the break of high a day. It just never got the action. It never got that push to the upside, but we were still able to grab about $1 per share out of SPI on a very decent looking flag setup. Again, looking at the 1 minute, looking at the 5, trying to get an edge on the stock. Everything was looking great. Grabbed it for $1 a share. We made some money there. Moving on to PEI. PEI was 10 times better of a trade. I mean, beautiful trade. Beautiful trade on PEI. Couldn't get any nicer than this. Let's go ahead and pull up the daily chart because this is what I noticed. Oh, we got a long way to go. All right, so we had PEI moving on up. PEI, when we first noticed it, it was chopping around. Go ahead and throw it on a 1 minute. It was right here, right around 114 to 115. The first thing I do, go look at the daily chart, right? No, first thing I do is, why is it moving up? What's the catalyst? Then look at the daily chart. Where's resistance? So I see that this stock is currently up very, very close to the 200-day moving average. 80 to 90% of traders utilize the 200-day moving average as a final sell target where they look to take profit, right? So I'm seeing, okay, we have 118, 119 resistance, 200-day moving average. We just broke above $1 today, just gapping up from yesterday, had some nice momentum, and it was pushing into the 200-day moving average, and the daily RSI was extremely overbought. So what did I do? I mapped out my trade, right? How much am I willing to risk? I'll risk 2 to 3 cents right over these highs, right? So the highs were almost 120. I'll risk 122 to 123. Where am I going to cover? Back down towards around these highs, right? So I went ahead and took the short off the 200-day moving average. I got filled at 118, and then it just got slammed. A beautiful slam on down to 107, 108. I was scaling out at 112, 111, 110, 109. So again, I had 5,000 shares at the highs of 118. My stop was about 2 to 3 cents over the highs. Was looking for that nice, 10-cent drop. We got it very quick, paid out very quick, very rewarding as well. Locking in a total $393.13 on PEI off a simple short. You've seen me trade these over and over, time and time again. When we see these stocks with no fresh news and they're just slowly creeping up into the 200-day moving average, and I see that as strong resistance and we're looking like we're struggling, and it's shortable, I will short those 100% of the time, right? Because the risk is so tight. You're putting your stop right above that 200-day. So if it pushes and you're stopped out, you're stopped out. But the odds are really in your favor because, again, 80 to 90% of traders in this stock are looking at selling, taking profit at the 200 or at the 200-day moving average. So when people take profit, what happens? The stock comes down. So that's a great area to short. Now, if buyers are very, very strong and it's a hot stock and it's just being an absolute beast, and it happens to be that one time that it pushes over the 200-day moving average and you get stopped out, you get stopped out, but it's very, very tight stop. I'm not putting stops at 130, 140, too far away. My stop is 2 to 3 cents above the 200-day because I do not want to see the price even get above the 200-day moving average. So that was the reasoning on PEI. Entry, exit to the short side, simply shorting the 200-day moving average. Moving on to Tesla. This was the best one. It was the least amount of profit, but it was the best trade. Super, super easy. And it worked out beautifully. We saw Tesla on a nice tear to the upside, and we notice it right around here. I don't have these lines drawn up, but I notice we have pre-market highs of 548.60. We're on this crazy steep uptrend. I mean, that is a steep uptrend. I mean, that's damn near 90 degrees to the upside, right? But it's respecting it. But look at these pushes. Comes down and pushes, right? Trend line, push. Trend line, push. Trend line, push. I made my voice go more shallow because that's what the stock's price was doing, right? It was screaming, and then it was screaming, and then it was whispering, right? It was shallow, 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 right off that trend line, right to pre-market high. So what did I say? The first candle that closes red below the trend line, I'm taking it short. We're on the trend line. We're very extended in price. You can see momentum's getting more shallow and shallow and shallow. Every push is weaker and weaker and weaker. It's becoming very weak, right? It's not as hyped up. It's not pushing as strong off the trend line. And once again, we're off those pre-market highs. So what I say, first candle closes below the downtrend, taking it short. First 1 minute candle to close below, took it short, stops over the high. And then at that point in time, I'm looking at this being a target here, right off those highs and those lows. And then my second target down towards around 542, that high and those lows. Took the short, 250 shares, got target, stopped out right there. So I got target on this one. I stopped out for a little bit of profit on the second sell as well, because me knowing Tesla is one of those stocks that can come down, bounce, and break. Wasn't willing to give any money back. I wanted to lock in my quick 200 bucks that I had. But if I would have held this one, we see that it came down to my final target, down towards around that 542. So overall, beautiful trade from an entry of around 547, grabbing 3 points out of it, actually coming down, 3 more points lower for a total of 5 points, hitting all the targets to the penny. Again, it was the least amount of money as far as the profit goes, but it was the nicest, cleanest trade, right? Simple crack of the uptrend, right at pre-market resistance, came down to the targets beautifully. Couldn't get any nicer than that. I didn't take this trade, but I do want to talk about Boeing. Just look at how nice that rising wedge was, right? We were actually looking at this earlier on Boeing. And this is what Boeing looked like at that point in time. So if you guys can see that, that's what Boeing looked like. It was in a rising wedge pattern. We alerted this. The first candle to close below the uptrend. If we continue the tag between support and resistance in this ascending wedge, look to short it, right? You have about 2 points to the downside for 220 first target. Then you were looking somewhere around that 219 to 218. Before the trade, alerting it, letting you guys know what's going on, right? After the trade, target hit. First candle to close below, stops over that candle high, and you would have just wrote it down. What's Boeing at right now? Boeing hit the lows of 218. So again, just wanted to throw that out there. I personally did not get the trade, but if you guys got the trade, awesome job. I mean, it was one of the cleanest rising wedges, ascending wedges, whatever you want to call it, that we've seen in quite some time, and it worked out beautifully from the entry to where the stops were and how tight the stops were to coming down right to our targets. Just a beautiful setup on Boeing. Unfortunately, once again, I didn't get the opportunity to take that, but if you guys got it, congratulations. Awesome job on that. So that's it, guys. 3 for 3 on the day. SPI, PEI, Tesla currently at $1,300 on the day.